Welcome to Emergence 2021. In this session, we'll be discussing the trends and themes of the UK investment scene. I'm lucky enough to have three experts with me today. My name is Paul Webster. I'll be moderating the session, and we'll be discussing this with Ian Warwick, Leo Davies, and Christian Faes. The three gentlemen, experts in their own field, bold enough to create their own business, and have all turned that into a wonderful success. Overnight success built on 20 years of deep expertise in their own industry, but then launching off to a fantastic career in their own path, and a wonderful both entrepreneur and investor story from the three gents as we progress. So if I could ask the three men to introduce themselves. Ian, if I may start with you.
Yeah, good morning, everybody. It's Ian Warwick. I'm the managing partner of Deepbridge Capital. Our company was founded 11 years ago. We're based in Chester with other offices around the UK and an office in Australia as well.
Thanks, Ian. Leo.
I'm Leo Davies. I'm co-founder and CEO of Moscar Capital. We're a venture fund managed from London. We launched in December 19, and we specifically target bootstrap companies with valuations ranging from 2 to 10 million, and we take an active role in positioning them for a Series A.
Brilliant, thanks Leo. And Christian.
Yeah, hi everyone. So I'm Christian Faes, co-founder of a business called LendInvest, which I co-founded in 2008. We are a technology-driven mortgage lender in the UK and have been building that business for the last sort of 12, 13 years. And I'm also a fairly active angel investor as well.
Brilliant. Thanks, Christian. The three gents, I will interrogate them is probably too strong a word, but guide them through a conversation to share their expertise and experience. And I think quite valuable in the sense, not just investors, entrepreneurs and investors. So they're able to walk you through and have a lot of empathy on the founder's journey, but equally the success required for a successful capital raise here in the UK. To start with, we'd like to walk through setting the scene here in the UK. And in that regard, we'd like to hopefully dispel a few myths about the UK at the moment and show you an incentive for why the UK is such an attractive scene at this point in time and a wonderful market. Can I confirm everyone can see my screen?
Yeah.
Brilliant. So setting the scene, really, it's covering off the impact of Brexit. Officially, the temporary arrangement ceased on the 31st of December. What you hopefully have read about is the very successful vaccine program here in the COVID vaccine program addressing COVID. And that in itself is leading to a fantastic resilience in the economy and hopefully a very strong snapback over the summer. Touching on Brexit, it really has four impacts: free movement, international trade, antitrust competition, and cyber and data elements between the UK and the EU. For those outside of the EU, it has no new additional impact to you. It's purely in the movement between the EU and the UK. So touching on free movement, only if you're in the EU, the right to come and work here freely without a visa has been removed. However, you can still come for 90 days in any 180-day period, as long as it's 90 days and you're not drawing a salary while you're here. You can train, you can do meetings, you can negotiate, you just can't draw a salary. For the Australians, Singaporeans, Indians, Americans, Canadians on the call, the requirement for a visa to work in the UK remains. A business visitor visa also lets you come to negotiate, have business meetings, see the market and understand it. However, if you want to migrate yourself or establish a workforce over here, you will have to continue to follow the migration pathways that you've been using to date. On international trade, the one that has really surprised business, and the two governments between the UK and EU are working together to address this, is the rules of origin. What that means is, what is the nationality of the goods moving between the markets? So whilst we had free trade and still do have zero tariffs between Germany, France, etc., the whole EU market and the UK, if those goods are still deemed to be from a third market, such as Turkey or China, then because of the rules of origin, those goods are deemed not to be from the EU, their nationality is deemed to be a third market, then tariffs may apply based on the UK's free trade agreements. So that is one element that has caught business by surprise, but the governments are tackling it. And to that point, other than that, the trade between the UK and EU carries on. An important element in the legal world, particularly for mergers and acquisitions of a larger scale, is the antitrust competition assessments. The competition market authorities here in the UK now has sole jurisdiction on these cases. Previously, the European Commission and the Competition Markets Authority would look at a deal together and both share jurisdiction. Now it is purely a UK government jurisdiction. There is a consultation on it to discuss how we can do that better. There is also an announcement coming out you've seen last week from the London Stock Exchange about how the UK will continue to do work, and also on EU subsidies and how the UK can use the divergence between the rules to see how it can benefit UK business more accurately. Last week, the UK and EU announced that the free movement of data, personal data, can continue to flow as well as business data. So a huge relief for business in that front. And that brings us to the end that Brexit really has not impacted business too much. Businesses had over 4 years to prepare. And whilst there has obviously been some impacts because of the source of origin and supply chains for those in the physical manufacturing industry, professional services carry on. With Brexit behind us, we're now moving into managing COVID. And hopefully you've seen in the press the speed at which the UK program has launched. It is now vaccinating about 2.5 million people a week on a population of 67 million people. With the top 4 vulnerable or priority segments of society now covered, we're moving into the over 50s by the end of March and all adults by the end of July. With schools reopening next Monday, the economy will continue to take these steps. You will see Boris Johnson and the British government made an announcement of 6 steps to the full opening of the economy. And it's now seen, but by June, if all goes well, that the economy will fully reopen, including packed stadiums for concerts, sport events, etc. So all social distancing rules or social limitation rules will be removed, providing a platform for businesses to meet. Obviously, like the rest of the world, there has been an impact because of COVID, but it is heavily directed or focused at hospitality, retail, tourism, and travel. Away from that, obviously there's been some impact, but the business support from government has enabled businesses to keep their lights on and keep trading. An example of that, there are 3 million employees on furlough, and that will be extended through to April to the point the economy is standing alone. We have seen businesses focus on survival and ensuring that they can capture and retain any revenue whilst they address any excess in their cost base. So that maturity of the response to what is happening inside businesses is now going from tactical to strategic, and we're beginning to see more movement in mergers and acquisitions, and that is driving activity in the market, as well as opportunities for innovation and alignment through innovative firms joining larger corporates. From the UK point of view, we've seen opportunities in life sciences. Weirdly, fashion, beauty and cosmetics have had fantastic years in 2020. Logically, remote working, online experiences, gaming and fitness at home, but you'll see a real surge in the green economy that is beginning to take off. And some statistics for those in the digital businesses or online and retail, online behaviours in the UK were already world leading with about 20% of all purchases being online. What we've seen in lockdown 2 is that shifted towards 60%. Again, the highest per capita in any large market in the world. And the one that surprised me the most was actually a shift in the over 65s. Their online behaviour has surged over 300%. And what would normally be the laggard segment has been pulled into normal online retail behaviour. So again, expanding the market opportunities for those who service that segment of society. And finally, all of this combines to show that the UK economy, whilst it has weathered several storms like all economies in the last 15 months, it's also preparing to snap back. So whilst Q1 this year with another national lockdown will see GDP decline in Q1 from 3 to 4%, the Bank of England is predicting a total end of year GDP growth of 5%. Given we're not predicting the economy to open up until April, that is a fantastic run rate, somewhere in the high single digits in Q3 and Q4 in 2021. So the UK has weathered the storm, is preparing to recover and really accelerate into the future. With that, it remains a strategic centre for business. It's the world's #1 international financial centre, clearly the largest venture capital market in Europe, and with 67 million people on average high incomes, remains the 5th largest economy in the world. The UK as a centre for raising capital for your business is the most logical location in Europe. It dwarfs Germany, France, Switzerland and Netherlands combined. And while centred around London, the total UK outreach provides opportunities and financiers across the region where you can locate most appropriate for your market. With its strong legal rights, flexible labour laws enabling you to expand or retreat your business as success grows, stability and a global outlook for international finance, using the UK to grow your business globally makes strategic sense. We have fantastic tax incentives. I would watch the corporate tax rate. There is a budget that will have been announced impacting the corporate tax rates coming up. We are watching that very closely, but fantastic incentives for UK investors ensure it remains the largest venture capital market here in Europe. It's simple and easy to do business, and no matter what your sector, it remains the #1 destination in Europe for foreign businesses to expand into and access Europe. Whatever your sector, there is a home for you here in the UK to grow and prosper. Now, enough talking from me. We want to hear from the experts. So with that as a scene setting that the UK is in a great place to prosper and bounce into 2021 and beyond, I'd like to open it up to the boys with a friendly warm-up question. And there is, we'll start with one question on the past, but I really want to focus on the future. Is your best deal that you've ever done in your business career? I'll start with Ian, Leo and Christian. So Ian, with you.
So I guess if you probably the best deal I ever did, which was outside of the current business, would be the turnaround of a US NASDAQ listed company called Aftersoft Group, which I was parachuted in after a number of issues. I spent 5 years with the company. The stock was down around 2 cents when I arrived. When I left, it was $1.60. We restructured it, refinanced it, took it from 26 companies in group down to 2 companies, one in the UK, one in the US, consolidated the management team, consolidated the software stack. I left when my job was complete. It subsequently sold for around $12.34 a share. So if you took the rights issue at 6 cents, you did pretty well. In terms of Deepbridge itself, our very first investment was a company called Resonant, which was a technology spin out from the Palo Alto Research Center in California. We brought that to the UK. We invested around £5 million of private investor money into that company. We merged it with another company called iPipeline, primarily because they didn't have the big enough footprint to attract the really big clients. And then iPipeline subsequently sold to Roper Technologies for, I think the number is 1.65 billion cash. So it was a very good deal for Deepbridge, very good deal for the investors. I'm not at liberty to tell you the returns as I'm subject to a confidentiality agreement. But needless to say, when you sell something for 1.65 billion, it's a pretty good deal.
Well, I'm sure many of us are probably trying to still count the zeros on the billion right on that, what the outcome would have been. But congratulations, Ian, on a fantastic, not just one, but 2 fantastic deals. Leo, your best deal.
Best deal. So pre-starting up Moscar, it's probably a firm called Needle Smart, which is still growing. in the medtech space. They essentially incinerate needles in an environmental way. They are obviously growing due to the recent pandemic requirements. And we exited there 3 years ago at 8x. I would say at Moscar, at the moment, it's our inaugural fund, but 12 months into our journey, we are already about to exit 2 of our first investments at a minimum 3x. That's all I can say at the moment.
No, that's brilliant. And you bought into the destruction of syringes as we've gone into a global pandemic and vaccinations.
You could say that's luck.
Either way, it's exceptionally good call. Christian, I know it's like not necessarily managing your own fund as a PEs like the boys are, but your best decision and call in your business world.
Yeah, I think it was probably, you know, the original investment that we made in setting up LendInvest. So sort of back in 2008 when my co-founder and I set it up, I think we spent in aggregate about £200,000 all up getting the business up and going and sort of getting to the point of being profitable in the sort of the latter days where things are getting stretched, as often, you know, on maxed out credit cards and things like that. But, you know, I think relatively a small amount of capital for the business we've gone on to be able to build. And we bootstrapped the business for the first 7 years. And I think that's kind of, you know, to one of the points made earlier, I think, you know, bootstrapping a business is quite an important thing if you want to sort of retain the capital. And so, you know, or retain the equity. So my co-founder and I still own over 75% of the business. You know, I think that's the, you know, that we haven't got the end return on that. I think that's probably still some years to come, but you know, on recent valuations, I think it's a good return to date.
Well, we've certainly seen some real positive press, and to still be holding the majority of shares, that in itself is a fantastic achievement. So congratulations. And hopefully that for our audience sets the scenes of the quality of the experts that I'm fortunate enough to have this conversation with. It really is about tapping people who have done it themselves, have supported others, and also turned away others. And I think both sides of that coin are equally important, because coming with realistic expectations is important, but also knowing that there is a welcome mat for those with great businesses and growth ambitions. Looking into the future, I'll go in reverse order this time, starting with Christian. What industries do you see as we snap back and I guess a sharp snapback and then a moderation to more return to normal themes? But what industries do you see as having more attention over 2021 and 2022?
Yeah, sure. So, I mean, I think, Paul, you know, in your presentation you ran through, there was some key points there. And I think now that we've potentially got through the horrible distraction of Brexit and seem to be sort of getting towards the, you know, start of the beginning for the COVID crisis, I think the back end of this year in the UK, certainly there's going to be a lot of pent up demand. And I think that certainly sets the scene for quite an exciting market moving forward. I think in terms of specific industries, clearly, you know, biosciences and medtech, I think will be probably more in the mainstream focus, just having come through the recent crisis. But I also think there'll be a resurgence of industries and sectors like fintech, and that's clearly an area that I'm quite focused on. I think in years gone past, the UK government has done a really good job of promoting fintech as a sector. I think as a result of the crisis, there has been this real acceleration of going online. You know, the sort of concept of going into a bank branch just you know, hasn't, you know, existed for some time now. And I think, you know, fintech will continue to be sort of a leading sector, and the UK's got a review coming out, and the Treasury is quite keen to continue the work that it's done there. So I think the fintech sector is kind of, it's been off to a really good start in the UK, but I think we're just getting started. So I think that's one to watch, definitely.
Yeah, certainly the maturity scale. I mean, they kept saying it's matured, it's maturing, but I think we can safely say when all the big banks had to close to new applications, it really showed how advanced fintech had come here in the UK, that they accelerated. And in fact, 2 of the digital players opened with their banking licenses either late 2020 or early 2021. And in that, for those who are on Christian's comment, there will be a report from Treasury identifying the 10 innovation centres for fintech that the UK will focus on. So that should be on the Treasury sometime in February. Moving over to Leo, your view on future industries 2021 and 2022.
I mean, there's been innovation across all industries and all sectors, and money is, as Christian says, is always pouring into things like medtech. Fintech and prop tech are always evolving because of changing consumer habits. But I think it's less about specific industries and more about the verticals within those industries. So concentrating on streamlining processes and service delivery. But that's not to say that horizontal markets won't boom either. I mean, look at delivery economy, look at marketplaces. They are constantly evolving within those sectors. So yeah, all sectors will do well. It's just more about the verticals within those sectors.
Yeah, brilliant. And Ian, your insight.
Yeah, I would echo what Leo's just said, and Christian as well. I think medtech, just by way of an example, last year around 35% of the money we raised was for life sciences. And that has substantially increased. I think that's a direct result of COVID, in that people are now taking bio-life sciences and medical technology more seriously and more acceptant of the long route to an exit. I think that's definitely raised that area. I think what is important to understand is that particularly in fintech in that area, yes, there is a substantial number of breakout companies and startups in that area, but that will ultimately lead to a substantial number of casualties. So it's very important that you are focused on key markets, and the fundamentals of the business are sound, in that the commercial reality of what people are trying to achieve is more important than the actual, not the tech itself, but the commercial reality of what somebody's developing is very real.
I guess I'll stay with you on this one if I can, Ian. On the growth business plans, as firms look to the future, are you looking at, let me rephrase that. How do you look at the growth business plans versus, is there a focus or preference from your business around market expansion, new products into existing channels? What is it you look for in a business growth trajectory?
Yeah, we look for companies that are developing IPs, so they have to be IP driven. Management who understand what they're doing. They've not jumped from a completely different career to this career. That the company must have global scalability. We're not interested in anything that's parochial to a particular country or region of a country. It must have the potential to move into multiple vertical markets, and it must have an element of disruptive nature to it. So it must be either creating a new market or substantially disrupting an existing market. And the reason for that criteria, whilst it doesn't seem very difficult, is that ultimately we are driven by return on investment. And therefore, the more verticals you can demonstrate your product in, and the more scalable it is on a global basis, the more potential for a substantial return on investment.
So both new channels, new markets, new products, and new solutions into those industries as well. Great. So a real call out for the entrepreneurs and founders out there. It really does pay to do your homework on a global expansion and the distribution channel elements. But also, one of the things we see regularly is how businesses come solving a problem from, for example, Asia Pacific, but actually the need for it in the UK is different, and actually they need to pivot their story quite quickly if they're going to be successful here. Leo, your view on, when you're working with founders and entrepreneurs, how they should present in seeking capital here in 2021 and 2022. What is it you would look for in their growth story? So
we have criteria that we rarely deviate from, because we're pre-Series A, post-seed. We can't be experts in every industry, so we have to validate that by other means. The first one being revenue. So we have to see at least a 500,000 run rate there. That validates the product. It means they're not fly-by-night. They tend to be over the brow of a potentially failing business. We also look at a bootstrap cap table because that shows that they can grow a business on a shoestring and manage and issue equity sensibly. We also look at businesses that are either cash flat or run a small profit, because that ensures that our capital is directed towards pure growth capital rather than any OPEX. And finally, we look at, because we're pre-Series A, we have to ensure that we can Series A within 18 to 24 months. So you're looking at a very small window of opportunity there, and often it ends up that we're selling to those companies to take our capital, because these are businesses that can raise finance quite easily, but we're there to institutionalize them. In terms of what we look for in a founder, it's a bit of a cliche, but they have to be tenacious. They have to understand every aspect of growing a business. So ultimately, although they have to be good at cap raising, we want to see them spend 90% of their time building their business, not the other way around. And they're easy to spot.
Brilliant. The hungry, aggressive, and the world is not enough approach.
Exactly.
Christian, for you?
Yeah, I'd agree with all those points. I think there's been some really good points made. I think, to Ian's point, I think probably at the tail end of the comment around fintech, I couldn't agree with more that, sometimes there's a lot of hype and excitement around a sector or, an industry, and people get caught up, I guess, in sometimes the concept itself of disruption, but then often lose sight of a business model or the need for, there to be revenues and ultimately to be profit. So I think, looking for a business that has a real business model is probably one of the key things that I would always look at when I'm looking to make an early stage investment. But then the other thing is, like Leah was saying, it's really about the founder and the early stage management team from my perspective. There's, well, you said in the intro, overnight successes, off the back of 20 years of hard work. And the reality is, I just don't think there are that many overnight successes. Like, that's just not the reality. Even Facebook took, 10 plus years to get to a listing. That's probably, one of the fastest, growing companies out there. So I think, the reality is it is a marathon, and you really want to try and find a founder and a managing team that are in it for the long haul and are really committed to going the extra mile and probably taking a decade or so to build a big and meaningful business. So I think that's quite key, and sometimes that's just trying to get a grasp of the mettle of the person and trying to understand what drives them and who they really are.
And it's quite interesting, both you and Leo touch on and I'm going to come to you on this, Ian, so you might want to prepare an answer, the importance of the characteristic of the key founders and entrepreneurs, and how you've both zoomed in on what is that they're doing and how are they going to drive the business. Ian, personal traits that you look in founders or in entrepreneurs that you're looking to invest in, what are those core ingredients when you sit down eyeball to eyeball that says yes or no?
Yeah, first of all, a good strong handshake and clean shoes. But putting that aside slightly, we look for people we can work with, and that's very important, because what happens in this cycle of investing, particularly when you do what Deepbridge does, which is multiple rounds, from 150 grand up to 12 million over a number of years, you have to have a very good relationship and a good partnership with these people. So if you're struggling at the outset, then you damn well will be struggling a few years in. And invariably, management teams that we deal with can have a great deal of experience in the market sector, but not necessarily a great deal of experience in globalizing a business and scaling it and all the international things that come with it. So we like to feel that the management are going to be acceptance of the fact that Deepbridge is going to be sitting there with them throughout this process, and that what we're contributing is there to help them and not a hindrance. So it's really about once you accept that they are capable of delivering. And I think what's important to understand is you can have a phenomenal product with an average management team and you will lose money. You can have a a fairly average product with a phenomenal management team, and you'll probably make money. So the team is absolutely key to the process, but a team that you can work hand in glove with, who are not going to be bombastic or difficult to deal with further down the line. And you can see that, or you can identify that issue pretty early on. So my advice to companies, to people who run companies who are looking for funding, is to accept very early on both the fact that you're going to be diluted, and secondly, that other people are going to play a part in the building of your business.
Yeah, and the dilution, and I think this plays to Christian's point, why it is such, well, not Christian's point, my observation that Christian still retaining 75% is exceptional, but also rare. In the view that to get the scale to grow, I think, Christian, your own business, LendInvest, is, you know, I think it goes to show the sweat that you and your co-founder put in to grow the business, is probably the way I would phrase it. But in the view of, certainly from the global market we work with, that entrepreneurs being humble, understanding they've got to make a realistic trade with the investors, is certainly, they need to understand that, and trying to say, I'm going to give away 1% of a company for a few thousand, you're not going to get in the door. And I think the understanding that dilution, and potentially if they outperform, maybe they can earn some of those shares back. But there's conversations to be had if you're realistic and humble about seeking support. I do like the handshake and clean shoes. Being an well, in British language, TA Navy officer, the shiny shoes is very important. So
very
a lot of respect for that. And I'll diverge for a little bit. Little cultural idiosyncrasies in the UK people should think about when they land here. And people might giggle at firm handshake and clean shoes, but play that in reverse. Come with a soft handshake and scruffy, and what response do you expect? So in the view of, what is it I mean, Christian, you and I share a non-authentic British accent. I mean, I'll start with you and then come to Leo and Ian. What do you think culturally people should be thinking about when they land in the UK to talk to investors?
It's a really good question. I mean, I think, yeah, look, people, you just by human nature are going to judge someone by the way they present themselves. And, you know, it's the first sort of 5 to 20 seconds or whatever, you do make that impression. So, you know, having a crumpled shirt, or, you know, sort of have not taken care in the way you're presenting yourself, you know, that's going to have arguably a negative effect. And I think that's probably not necessarily cultural to the UK. That's probably everywhere. But certainly, you know, that's something that is across the UK. It's interesting in the tech space, though, because often there is a kind of a perception to be a successful, you know, tech founder, you've got to walk in with the scruffy jeans and joggers and, you know, a t-shirt on. And certainly I've been guilty of that at times as well. You sort of, you feel like you're sort of fitting a mold that, you know, is presented on TechCrunch is what you have to do. Yeah, I think it's just the sensible stuff. Present well. I think the UK generally, and certainly, you know, my experience has been in London, that it's a very multicultural city. It's a very dynamic and diverse culture. And from a business perspective, you know, people generally, which people may be surprised, certainly, you know, from Australia, who generally don't care what university you went to. You know, they're not obsessed about what school you went to. You will be judged on your merits. And I think, you know, you will get a fair go in the UK if you present well and sort of come in the door with a good idea. Generally speaking.
And I'll add the caveat there, and I certainly don't think you mean this. The present well is, we're not talking about speaking English perfectly. We're saying be articulate with your business model is what we mean by
yeah, exactly. Be considered and thoughtful and respectful of people's times, and just sort of have common courtesy, I would say, is kind of would get you off to a good start.
Good old English manners. Leo, to you, what are those cultural things that you would expect to, well, you'd hope to see entrepreneurs display here in the UK?
Yeah, it's less cultural and more to do with understanding who you're talking to, so who you're pitching to, because pitching to me might be very different to pitching to Ian, might be very different to pitch to Christian. So we won't judge people by what they're wearing, or if they're coming from the EU and have slightly cultural differences. But, you know, manners is a global thing, ingratiating yourself is a global thing, and like you say, describing your business in an eloquent way is all important. So yeah, less cultural, more doing about your homework, about who you're pitching to, what they're looking for, And if that does mean wearing a pair of shiny black shoes, then you should be the chameleon and do that. So yeah.
And I'll play that back. If you're going to do global business anywhere, you need to reflect the culture of the market you're in. You certainly, you only have to think about going to the Middle East and thinking how you'd behave and how you'd present yourself. Equally across Israel and certain parts of America, you'd certainly have a different dynamic in conversations. From San Francisco into Texas, how you talk, what people would expect is a very different attitude. And Ian, any comments on the culture element?
No, I think there are cultural differences across the UK. I think the further north you go, and speaking as a northerner, we tend to be a little bit more forthright and a little bit more, we don't like any bullshit. We like it completely, what's the worst case scenario here, guys? And when you talk about America, I had 7 years in New York, but I also had 5 years in Texas. And that's very similar, but reversed in that Texas is very like the north of England, where New York's more like the south of England. But I think the key thing for founders is having empathy with your audience, and that is understand people you're pitching to, as Leo said. It drives me crazy how many emails I get as managing partner that if somebody did a little bit of research, they would see we have an individual in the team who's responsible for that area. So, just understanding your audience before you go in and being empathetic and pitching in a particular way that suits that audience.
Yeah, and a good insight of bosses are busy, come in at the right level.
Absolutely.
Yeah.
As we zoom out for the sort of 2 to 5 years, and people, some might be a little bit earlier in their growth trajectory and trying to understand, are they following a fad? Is the bubble bursting? How do you separate between someone being on the right wave at the right time versus chasing a bubble and a fad, and actually by the time it's not going to play out and it will dissipate? And we're hearing a lot of that. I mean, the e-vehicle market itself was hitting fantastic valuations, and I believe, according to the FT, has dropped 20-25% in the last month, to the point Ford has outperformed Tesla if you got in 30 days ago. So there's a crazy statistic for you. What is a bubble? What is a megatrend? And at no point am I saying e-vehicles are a fad, but simply, how do you know you get on the wave at the right time? And how do you distinguish between what might be a pop-up fad? What is a megatrend that's worth being on the patient capital that you touched on earlier, Ian? I'll start with Ian and work my way back to Leo and Christian.
Yeah, look, I think everything you invest in has an inflection point, and it's having the skill to understand what that inflection point is. And you shouldn't always rate around trying to get 30x on your investment. If you're getting 2x, you've done pretty damn well. So I think, the bubble scenario, when you talk about things like electric vehicles and that areas, I think you have to, as a fund, we set out to return to our investors within a reasonable timescale. We were presented a quantum computer probably 12 years ago, 11 years ago. And you know what? Absolutely loved it, thought it was fantastic, but figured my investors didn't want to wait 20 years for a return on investment. So that there are horses for courses. So I think depending on what sector you're in and what you're looking at, it's all about timing really, but everything you invest in ultimately will reach a peak and then it will fall away. So it's about understanding where that peak is and being aligned with the management as to producing an exit at the right moment. And I think the only way you can, the only way you get to understand where that peak is 20 years of experience, is being involved in industries with the management, looking at a company and saying, okay, we've achieved a certain level here, and it's time for somebody else to take it on or not, as the case may be.
And I'm going to come back on the next question, Ian, but I'll forewarn you, and as well as Leo and Christian, and to this point, what insights can you take from 2008, 2000 and previous recessions that you can dust the playbook off looking forward again? What is that back to basics, macro global economic cycles? What is a tried and tested method that people might want to consider as we come out of 2021, being more like a 2010 period in a historical effect? Leo, your view on megatrends, fads, and businesses being at the right part of the wave?
Yeah, I mean, I suppose a fad by its definition is something that's short-lived. So that's not something we would get involved with. In terms of a mega trend, we're very conscientious of our portfolio and how it's diversified. So if we're learning about a mega trend, we won't necessarily invest in it. Now, I'm going to completely contradict myself and say that one of our headline investments and superior performing investments is food delivery. So you might think that that's been hammered to death globally. But Supper Deliveries, based in London right now, delivers high-end food delivery. So Michelin star restaurants within a maximum 3-mile radius of the restaurant. Now, they've grown by 2,700% year on year, Feb to Feb. And they're growing by 10,000 new customers per month. So who am I to say, who should or shouldn't invest in a mega trend, because we have done that. So very difficult to discern, but I think it's more a case of, does it fit in your portfolio? Does your team have the tools to carry that business forward, even in a mega trend world?
A great insight, and also a very niche play. And I'm sure around Valentine's Day they must have been flat out, because actually that was a huge segment of trying to get high quality meals when you couldn't go out.
Correct. It was their largest month to date. So
I can say, because I found it very hard living in the country and to get a high quality meal home delivered. So certainly out of your 3-mile radius. Christian, yourself?
Yeah, I think it's really difficult, isn't it? I mean, I think some of these fads and sort of areas that are overhyped sort of, overshoot in the short term, but maybe undershoot on the long term. I think, even if you look at the internet.com bubble, there were elements of that, back in 2000, where kind of there's a huge amount of excitement about this new thing called the internet, and sort of companies got valued in a ridiculous way. And, companies like Amazon and stuff, perhaps, 20 years later, still doing, exceptionally well. And I think there's elements perhaps of that in electric vehicles and areas like crypto, where perhaps there's a huge amount of hype and excitement, but it's yet to be seen, where that will be in, say, 10, 20 years. So I think it's really difficult. You've got to try and sort of overlay the macro market as well, and try and understand where we are in the cycle, and if we even have cycles anymore, I guess. But try and understand where we are and where the potential is for some of those things. Because I think sometimes, chasing a fad, you can still make a lot of money. It just depends on what your time horizon is and what your appetite for risk is.
Brilliant answer. And I'm going to give you a forward notice on a question. Your industry particularly has been hit by what some of the industry players refer to as regulatory churn, and a very evolving landscape for you on regulation, requirements, market impact. Sometimes you get government support, then it's ripped away. So I'm going to come to you on the impacts and how agility is so important when you're looking at a business plan in dealing with that. Ian, back to you on insights you can share from previous recessions and economic, crises, to sum up recession, depression, etc. What is your playbook suggest, and how people should look at it coming into 2021?
Oh, look, I was involved in the dot-com bubble. I had a great business. I was involved in that period. I think the key thing is, look, everything comes back. It may not come back exactly as you left it, but everything comes back. So it's about having the resilience when you're in this current scenario, as we did at Deepbridge, and we advised all our investee companies to do. We said, let's treat every business as a turnaround right now and extend your runway. So I think a lot of our companies and Deepbridge itself looked at how we extend our runway. Certainly in April, we didn't have a clue how long this was going to last. And I think the important thing is that people don't wait and think, well, things are going to get better. They have to prepare for the worst and hope for the best. But certainly when you get one of these scenarios, and 2007, 2008, we founded Deepbridge in 2010 when the sky was still falling in, but it was actually a bloody good time to start the business. We were able to get a lot of traction at that time when everybody else was wrapped around dealing with their own internal issues. So there are huge opportunities in this scenario, in that if you're nimble with a low cost base, unlike some of your potential competitors who are probably carrying a lot of overhead and costs and debt, you have a great opportunity. So I would say to people, don't worry too much about COVID-19. It will be come and go. It will be gone. Well, it'll be with us forever, but it'll be gone in its current form. And there will be substantial opportunities because things are, just to give you an example, I tried to book a restaurant in Padstow. It took me 3 hours to get through yesterday. So if that's an example of how crazy it's going, things are going to go ballistic. So position yourself now, make sure you're well funded, take advantage of the uplift.
I think that brings out a good point. We talked about you've got to have the growth story, but actually that cash flow analysis of your cash runway must be in the storyboard. Yeah. This reminds me of Emergence 2020, where someone said you can have operating losses, but you only run out of cash once. So one that still makes me chuckle on sadly an all too real observation. For those who don't know Padstow, a lovely seaside town here, and I imagine when Boris came out with we're going to be opening the economy, I believe if you've survived, to your point there, Ian, and you've had the runway as a travel agency or in the tourism sector here in the UK, 2021 will probably be your best year ever once we get through Easter. Leo, your learnings from previous cycles.
Yeah, I mean, I think it boils back down to old adages and, there's opportunity everywhere. I think 2020, 2021 will be vintages like 2008, 2009, Uber and Airbnb being prime examples. But as Ian says, use this time effectively. Raise as much money as you can. I think two good examples from our portfolio are one of them is a soda company, and they pivoted to B2C within a month, and we're up to 65% of normal levels. But they also use that time to develop their international relationships, which is now being expedited. So, a little under a year ago, they were speaking to distributors in France, Germany, Norway. They're now distributing to France, Germany, and Norway. So, use that time effectively. Another firm used it to raise an extra 2 million off the back of developing a significant piece for a large client. So, and they raised that 2 million in 5 weeks. So never be idle, never stand still. There's something you can always do. And if you're not doing it, then the chances are you probably won't succeed.
It is self and survival of the fittest and the hungriest. Christian, a slight pivot on the question, particularly in your industry, we've seen, since 2008, I can't think of a 6-month period where there isn't some twist or churn in regulation. What do you look for in agility of business plans, but also in your own business? What could you share with other entrepreneurs on the journey in the UK?
Yeah, I think that's right, actually, and when I think back, that is right. There's been a lot of regulatory shift and kind of the mood sort of changes from the regulator from time to time, and I think staying nimble as a business has been incredibly important. And certainly, there was a period of time where we were pursuing, for example, like the peer-to-peer model of business, because there was a lot of perceived value in that from investors, and so we were sort of building a big platform around that. And then the sort of regulator was kind of like, the mood was changing, and so we sort of pivoted away from that. And you've got to take your investors on that journey as well, which is can sometimes be difficult because they may have come on perceiving the business, pursuing a certain business model and a certain journey that turns out to be a little bit different. So that can be a challenge, but I think you've got to just sort of look, be sort of thinking long term all the time and kind of trying to make short-term decisions based on the long-term best interests of the business, and not do, I think ultimately just not get too caught up in the noise. You often have people sort of giving you views from every different which way, but you kind of stick to your core principles, and that sort of medium to longer term vision is probably most important. In terms of the learnings about the cycles, I mean, I think I don't know if it's the right lesson, but certainly it feels for me that if I look back at 2008, it kind of felt like the world was potentially going to end, with the headlines about ATM machines running out of money and all the rest of it, and then it didn't end. Like think back to last year, clearly it's a different type of crisis, but they were talking, maybe there wouldn't be a vaccine, maybe this is kind of the way the world will be for forever. And, that hasn't been the case. And I guess the template's been set with the government just throwing so much money at things that kind of they've got a vested interest in ensuring that the world doesn't end. And, I think kind of like if you can keep a business nimble, I guess, again, and, lower your cost base if that's what you need to do to get through it. I think that's important. And actually, I think there'll be some really good businesses that will come out of this period, as often seems to always be the case. So, I think you got to stick with it, and that's part of just the grit and determination required for the journey of building a business as an entrepreneur.
Brilliant. And as we bring this to a close, approaching the hour mark, I'd like to ask you each for your observation and I guess your key trend in the UK investment scene coming into 2021, 2022, and what it is you would ask investors or entrepreneurs to be thinking about for the UK marketplace. So, Ian, if I could start with you, your outlook for 2021, 22, specifically on the UK marketplace.
Yeah, we are already seeing a substantial uptick in investable income coming into the business. Where every month so far is a record-beating month for us. February has already exceeded February 2 years ago, which was our best February. So we wait to see what March will do. Obviously, our biggest month because we are enterprise investment scheme guys. I think for anybody watching this from out with the UK who has an interest in coming to the UK, then by all means speak to us. We have a new 12,000-foot facility coming in Chester, which will be not just an incubator for early stage companies, but it will be a base for companies. We've already brought 5 Australian companies to the UK. Now, that doesn't mean that they leave Australia completely. They still have their operations in Australia, but they're using the UK as a springboard. So we've done 5 Aussie companies. We're looking at another 5. We've done 1 US, and we're currently in negotiations with one of Israel's largest incubators to house companies here in Chester and support them financially in that process. So we're pretty buoyant on the next 2 years. I think the key thing people need to consider is when taking that investment early on, make sure that your funder can follow, because there's nothing like taking $500,000 and then you can't raise the rest. So make sure your funder can follow and continue to follow until such time as you reach a position where you can step out and attract investment from the big guys. So my word to everybody out there is the UK is an extremely attractive market to come to. It's extremely well funded. I think over 9 billion was invested in earlier stage companies. And, it's an attractive place to be. It's a great springboard. I think Brexit serves us well in that we are now not subject to EEC rules. And I expect to see some relaxing of the rules here in the UK, which will make it even more attractive for individuals to invest in companies. And people get pretty excited about companies coming here from overseas. And I think it's a great place to base yourself. Don't think about leaving your own environment, because that's the most environment you're in. But come to the UK, use it as a springboard for Europe. And in particular, use it for a springboard to the US, because you need to be very, very ready before you go to the US. It's a completely different market. Just because they speak English doesn't mean it works the same as the rest of the world. It does not. So use the UK as your springboard. If you meet our criteria, by all means, reach out. Thank you.
And just one comment in with they assume they look on your website, you have your investment criteria on there, brilliant. And remember the tip, look for the person running the sector or the region before you make contact with Ian directly. Leo, so we have your observation. Sorry. No, go in.
I was just going to say we have two dedicated teams, 1 life science and 1 tech. So reach out for those teams.
Brilliant. Thank you, Ian. And I hope you have a wonderful summer playing cricket, enjoying tennis, and getting some nice oceanside restaurant activity in after that wait on the phone call. We all hope. It's still a long journey, but we certainly hope. A bright light now waits at the end of the tunnel. Leo.
Yeah, I mean, again, echoing a lot of Ian's points, but I think coming to the UK, really do your homework on who you want to pitch to. There are so many VCs out there that are very specific. I mean, we are deliberately sector agnostic, so we are open to most businesses that are in a period of exponential growth, as long as they hit our criteria. But I think it's almost shifting into the hands of founders these days, because there are so many VCs and I would say fewer very scalable businesses. So, you know, I think that founders can be comforted by the fact that there is a much more transparent environment going on, and that will continue. So it pays to speak to the right people. Can they institutionalize you? Do they have the right team? Can they, do they have the right board members? And I suppose that's what we do. We institutionalize them, we get them to their Series A to ensure their long-term growth.
Brilliant, and also nice to know that actually the entrepreneurs have some negotiating position. So
They certainly do these days. Yeah, they certainly do.
Christian.
Yeah, I mean, I'll just finish off with largely what's been said. I mean, I think the UK, you know, it's a big market. It's a very entrepreneur-friendly market. It is a great place to start a business and build a business with the tax incentive schemes and the sort of the, you know, the weight of venture capital and just the sort of being the centre of capital markets globally. It is a great place to build a business. I think in terms of sectors, fintech, it is one to watch with the Khalifa review. I think the Treasury is going to roll out a whole range of very ambitious programs around trying to sort of really reinvigorate that as a sector. And I think that's got an exciting future ahead for it, as with, you know, the whole of the entrepreneurial landscape for the UK, really.
Yeah, no, and fully agree. I think we've got the most supportive regulator in fintech globally, and just seeing the fast followers around the world is a great compliment to how attractive the British scene is. A big thank you to the three of you, both as founders in your own right and investors. Certainly a really strong message coming out. The UK is open for business, but do come prepared. Have your growth story, be global, cross-sector applications, be able to pivot and be nimble for industry challenges that may come your way. Do think about your cash flow, talk about your cash burn, that you can run it lean, get to break even as soon as you possibly can, and ensure that the investment round gives you enough runway to de-stress the investment, but also that your investor is there and with their network can continue to reinvest on your growth journey as you go. With the people and the entrepreneurs, make sure you're ambitious, you're growth hungry, you're not coming to get an exit in 1 year, you're coming to grow a business. Be humble, realize you're working with experts in their own market. You might have deep expertise on your element, but appreciate the commercial expertise that investors bring to the table for you and their experience and proven track record. Reflect the market you're in. When you come to the UK, as Ian says, you can be up north, you can be in Scotland, there's great asset managers across the country, but also down in the southeast. And it's not necessarily about what you're wearing, it's about reflecting what it is that investor expects of people in their portfolio. And that applies globally wherever you go. And my couple of lines I really like, but the short-term decision-making in the long-term interest of the business really resonated with me. And I'm definitely of the part of a firm handshake and clean shoes plays with me very well and shows you're genuinely interested in you're coming here to impress and to create a longer term relationship. Leo, the hungry element for me really stood out about just really being driven, and the word tenacious. Sometimes I think that is underestimated in the entrepreneur and capital investor round. To the three of you, thank you for your time. Emergence 2021 is pleased to spend time with you, and I hope the entrepreneurs and investors out there, either investors wanting to dilute through a portfolio investment, please contact Ian and Leo. They can help you place your funds across a portfolio. Entrepreneurs, reach out to the three gents. There's a fantastic opportunity for your business here in the UK, both domestically, across Europe, and to expand across the world. We thank you for your time and enjoy the rest of Emergence 2021.